Brokers Digest, a webcast series by The Edge Singapore, discovering market opportunities with you. This episode is sponsored by Tiger Brokers.
Hello and welcome back to another episode of The Edge Singapore's Brokers Digest. I'm Felicia Tan, and this week we will take a look at the differences between traditional brokerages and online brokerages, as well as what investors, especially new investors, should be looking at when signing up for one. Retail trading has been on the rise in the US since 2019, when brokerages have embarked on zero commission trades. The COVID-19 pandemic, which has caused uncertainty and volatility in the market, has seen even more retail investors around the world getting into the stock market, presumably to take advantage of the lower prices from the market correction. In January, shares in video game retailer GameStop surged 134% to US $347.51 from US $147.98 the day before. The trading frenzy was attributed to a slew of younger investors on the scene who are now conducting trades via their smartphone apps. So joining me today to discuss the impact of online brokerages nowadays, how investors should select their first brokerage, and more, is Ian Leong, Head of Business Development at Tiger Brokers Singapore. Hi, Ian. Welcome to the show. First of all, what are the different types of brokerages and what are the key differences between them?
Hi, Felicia. Right. Basically, for brokers, I'll categorize them into two categories. So basically, I'll have the traditional brokers, or should I term them as the local brokers? Well, at the other end of the spectrum, I actually term them as online brokers, which is very similar to that of Tiger Brokers. So for the traditional local brokers itself, what happened is the main characteristic is that they actually operate a majority on a agency model. So by definition of a agency model is that such brokers will employ a sales force, usually commission-based, which we term as trading representatives, remisers, or dealers to service their clients. So basically, this sales force, what happened is they will provide financial advice, administrative support, handhold clients when it comes to their investment needs, from the very first stage all the way to the monitoring and building of their portfolio, so on and so forth. But with this, what happened is, as mentioned, they are actually commission-based. So the companies will have to pay salespeople a part of the commission, and thus the cost for employing such sales force tends to be higher, which is translated back to the transaction fees passed down to investors itself. Now, for online brokers, on the other hand, what happened is we eliminate this middle layer, this salespeople. So we are able to actually drastically bring down our costs, because we are actually able to offer lower costs for our investors when you want to trade in the market itself. Now, having said that, what happened is that even though that we actually take out this middle layer, what happened is usually for online brokers itself, our trading apps tends to be more holistic. So if, let's say, clients want to search, research, placing orders, and monitoring portfolios, basically all can be done via their app itself, in a nutshell.
Could you also tell us more about the advantages of using each one?
Okay. As mentioned, for traditional and local brokers, what happened is you have a specific trading representative assigned to you. So in the event whereby, say, for example, you are looking to invest in certain sectors or certain investment profiles, such trading representatives or financial advisors are able to actually cater to your needs when it comes to the investment advice. They are also able to handhold you when it comes to, say, for example, your investment needs. It could be in terms of administrative aspects, account aspects, so on and so forth, all the way to the financial advice. Now, what happened is for online brokers itself, basically it's, as mentioned, we actually take out the sales force, the middle layer. So you're actually able to do all the research from start to the end using our application. Yes.
We know online brokerages can be very competitive in their pricing. So how can traditional brokerages compete in terms of pricing, given that most investors are generally quite price sensitive?
Okay, end of the day, it's I will say it depends on the client's needs. Yes, specifically. So say, for example, if you are a investor who actually prefers to actually do your own research, you actually prefer to actually know exactly what you are looking for, perhaps a online broker will be best catered to your needs itself. Now, but if let's say for example, if let's say you are an investor who actually who's looking in terms of financial advice, perhaps the online correction, the agency model, the local brokers will be better catered to your needs. Yes.
Apart from fees, what other criteria should investors perhaps consider when choosing a stockbroker?
Okay, end of the day, it's investors should actually look for a broker best catered to their needs specifically. So it does not mean that say, if let's say broker A offer you the lowest rate, you should actually go with broker A itself. Basically, what happened is you should go with one that actually can actually help you in your investment journey holistically. Now, what happened is we'd actually done a study previously. So typically for a client or investor, they typically have about say 2 to 3 broking accounts. So for each broking account, they actually have a specific need for this. So say for example, their main account, they actually trade in the US markets. They chose broker A because broker A's rates tends to be lowest. And if let's say they want to trade in the secondary market, like say for example in the SGX market, which is the local market itself, they will actually choose, say for example, local broker B. It could be due to reasons like say broker A do not offer this market, or say for example broker B actually have a lower rates. And apart from this, sometimes we do notice that both clients, investors, they actually will actually result in trading with a broker C. This is when they actually want to trade in another asset class, like say for example options, futures, or even funds itself. So all in all, what we do notice in investors in this region is they tend not to just trade in one account with one broker, but they separate into different brokers. Now, is this, say, for example, what they wanted, or they're actually being forced to do so? From what we see, it's they actually do this because different brokers cater to their needs specifically for each market differently. Now, for Tiger Brokers, what happened is our mantra is very simple. So we want to provide global markets and services to all our clients via the Tiger Trade app. So instead of what we wanted to do is we want all our clients to be able to trade in the different markets and all the different products consolidated in one trading app itself. So basically, clients do not need to separate their portfolios with different brokers, which actually makes it more convenient for them.
So what we're hearing is that investors who need more help and information should go for traditional brokerages where they have brokers to take them through the process. Is that right? But what happens if you are an investor that requires more help but want to take advantage of the lower fees?
Okay, end of the day, it's we need to see, say for example, by definition of more help. If let's say you're looking for financial advice, you're looking for someone to actually build a portfolio for you, for your investment based on your investment profile, yes, you should actually look for a traditional broker who has a sales force, who is actually able to cater to your needs specifically on this. But if let's say you're looking, if let's say applications, if let's say you're looking for, say for example, trading ideas, stock screeners kind of facilities, perhaps an online broker is able to cater to your needs based on this. Plus, we actually do offer lower broking rates. Yes.
For Tiger Brokers, why did you choose to come into Singapore at this time? Is it because of a trend that you guys can see?
Well, a bit of background. What happened was when Tiger Brokers first set up shop back in 2014 itself in China. So what happened was the account opening process was cumbersome at that time, and it takes weeks to do so. And basically, the rates to trade in foreign markets was pretty high as compared to now. And last but not least, at that time, most of the trading softwares were actually a PC related instead of a mobile application. So when we first started shop, basically we saw these 3 pain points from investors. So this is why we actually started Tiger Brokers based on this 3, and which actually converted to our forte. So what happened is investors will know that for Tiger Brokers, if let's say you want to open an account, fund and place your first trade, it can be done within hours. And when it comes to our rates, because we actually automate most of our processes and we cut off the sales people aspect. So what happened is we are able to keep our costs very low. And last but not least, if let's say you have seen our Tiger Trade app, basically it's one of the best functions in this region itself. So what happened was we actually entered in Singapore early last year, February 2020. So it kind of coincided with the COVID-19 pandemic. So what happened was at that time, as you correctly pointed out, at the start of the year last year, basically markets actually went through a drought. So what happened was there was a correction in prices. The asset prices were relatively cheap. So it actually encouraged a lot of investors, new and existing ones, to actually start entering in the market itself. So for local brokers, what happened is there was a huge influx of account openings, client onboarding at that time. So for a process which typically takes place a few days, it actually took about, say, close to a month just to open an account for most of the local brokers in our region back last year itself. So when Tiger Brokers came into the scene, what happened was a lot of people did realize, hey, instead of waiting for 1 month, I can actually open an account with Tiger Brokers, which can be done within a couple of hours. And they actually offer a lower rate structure. And the mobile app, which is Tiger Trade app, which is really cool, and unseen of at that time. So this is our actual value proposition. And this is why many clients actually welcome us with open arms, because they saw the strengths that we can actually bring them in their investment journey.
That actually brings me to my next question. What can Tiger Brokers Singapore offer investors at this juncture?
Okay, basically what happened is, apart from the 3 points that I've just pointed to you, which is the ease of account opening, low rates, and also a fantastic mobile application, what happened is at Tiger Brokers, we have a very simple mantra, which is global markets and products for the masses, via the Tiger Trade app itself. So apart from those 3 that I've mentioned, basically for Tiger Brokers, what happened is we do notice for investors, they basically want to diversify their portfolio. It can be in terms of the different markets, like say US, Singapore, or the Hong Kong market itself. And it's also pertaining to their asset classes. So not just in equities, but you also want to trade in other product classes, like say, for example, funds, options, or even futures. Now, for Tiger Brokers, what happened is we're able to provide this to all investors all in one app, which is our Tiger Trade app.
We do want to talk about the free share now, a Starbucks share that Tiger Brokers is offering new users. The share, we understand, cannot be sold until 10 trades have been made on the platform. Can you explain the rationale behind the move?
Okay. What happened is when we first entered Singapore, apart from our strengths that we can offer to investors in this region, we also wanted to grow the investment community in this region and make investment more fun and accessible to everybody. Thus, we launched community chats in our app, on social media, and even our own Telegram chat group, along with campaigns to encourage investors to start investing. Now, so when we decided to give out the free shares to investors, like say in this instance, Starbucks, one of which was the criteria that was set was that sales proceeds can only be withdrawn. The free Starbucks share sales proceeds can only be withdrawn after 10 trades has been made. Now, so we had a lot of clients' inquiry was, hey, why do you need to place 10 trades first before I can withdraw out the Starbucks sales proceeds? Is it to help you to recuperate back some costs? No, that was never the case, because after all, our US markets, our minimum comp is USD 199, and our Singapore market to encourage investors to trade in the local market. Well, we currently don't have any minimum commissions itself. So basically, the transaction fees from this trades will be minimal as compared to the price of a Starbucks shares, which is about, say, USD 110, 111 as of now. So when we did this, what happened is we want clients to actually try our application, try the different features, interact with our app, to make sure that, hey, see the benefits of using Tiger Trade app in your investments need itself. So basically, I hope this actually clarifies why we actually have clients to place 10 trades via our Tiger Trade app before you can actually draw out the free Starbucks shares. Sales proceeds. Yeah, thank you.
So what are the cool features users can get excited about on your platform?
Well, apart from the low fees, so basically what happened is we have a lot of interactive features that are available in the Tiger Trade app. But what I did love about the Tiger Trade app is three things. The first one is actually, say, for example, the interactive charts. So this software itself, basically what happened is you're able to have a charting software which is as good as the PC version or in your mobile trading app. You're able to have, like, say, for example, the different indicators. You're able to actually put in a comparison between two charts, two different counters, or in your mobile application itself. Now, the other feature that I like is the community feature inside the app. So most of our competitors, what happened is for the app itself, it's just pure news, and pure trade and monitoring of your portfolio. But for the Tiger Trade app, what happened is we want to pack all your investment needs into the trading application itself. So not just on the three aforementioned features itself, we also have the community inside the trading app. So you are able to interact with like-minded investors based on, say, for example, if let's say you're looking at particular counters, you're able to interact with said investors to see what's their views. You guys can actually discuss how's the market, things like that. And last but not least, the thing that I actually like about the Tiger Trade app, it's our stock screeners. So basically, as mentioned, apart from just a placing of trades and monitoring of your portfolio, our stock screeners is as good as any PC software comparison. So basically, are able to actually put in quite a number of criteria and filters, and from there, you're able to select to see which are the counters that cater to your investment needs.
That's very cool indeed. Speaking of low fees, we have major brokerage firms in the US offering commission-free trading. Will we see commission-free trading amongst Singapore brokerages soon? And how will it possibly affect the brokerage industry here?
Well, very good question. So what happened? It's the race to zero commission materialized back in 2019 when Charles Schwab announced to abolish commissions when it comes to trading stocks. So most of the bigger brokers in the States, US actually follow suit. Now, the thing to take note is that Charles Schwab actually had this vision decades ago. It was not planned like, say, 5 or 10 years ago. No. Charles Schwab back in the 1990s, they were a disruptor themselves. So at that time, they actually knew that, hey, zero commissions is a thing of the future. So they actually planned for it back then. So in order for this to materialize, personally, I feel three things is essential. One is your dependency on the transaction commission revenue has to be low. And your percentage revenue from the agency model has to be fairly low, single digits itself. And last but not least, scale. It's common knowledge that size does matter, or in this instance, scale. By definition of scale, your AUM, AUC has to be of a certain size before you're able to offer zero commissions. Now, so how does brokers actually earn money? If let's say I do not sell my flows and I do not charge commissions for when my clients actually do trade, basically you actually have to find alternative revenue sources. It could be in terms of your SBR or share borrowing lending programs, your MMF, your money market funds, or interest on cash deposits when clients' funds are with you, or also in terms of margin interest or FX swaps itself. Now, so basically what happened is when Charles Schwab announced they are going to do zero commissions back in late 2019 itself, they were able to do so because they had this planning for decades. And then what happened is their commission revenue was actually in the single digits. So the impact on revenue itself was very minimal for them. Unlike, like, say, for example, their competitors at that time were all in the double digits. TD Ameritrade, I think, is close to 28%. E-Trade at that time was about, say, 17% itself. Now, if let's say we were to bring things back into the perspective in our context here in Singapore and in the region, okay, when we do a comparison, the smaller brokers itself right now, based on my estimates, personal estimates, basically because their AUM and AUC is small and their commission revenue makes about say 50 to 60% of their total revenue, or if not even more. While the bigger brokers who actually plan for this zero commission fight in the near future, they actually drastically brought down the cost of commissions. So basically, it's ranging between 20 to 30%, and they're actually more in line to be better in place to actually to do zero commissions. But are they really ready right now? Basically, not yet, because end of the day, we need to bring this down to single digits to actually make sure that your commission and revenue will not have too much of an impact on your bottom line at the end of the day. Now, this is where Tiger Brokers and online brokers comes in, because we have a very low staff cost to start off with, because we are a startup and most of our operations are automated. We don't have an agency model per se, like most of the local brokers. So this is why we're able to bring down our costs drastically and actually pass down this cost savings to our end clients. And apart from that, we also do have, like, say, for example, a subsidiary by the name of Masco Investments. So basically, they actually have a clearing membership in the States itself. So this will actually bring down our costs drastically moving forward in the future itself. Yes.
For investors looking to buy into Singapore stocks and overseas markets like the US, would you suggest that they go with the same brokerage or open a different brokerage account?
Okay. End of the day, it's from the study that we did previously. It's we do notice a lot of investors actually do prefer to consolidate all of their investment holdings into one with one broker or with one bank. So this actually allows them to actually have a holistic view of their investment needs or correction of their investment portfolio with ease. Now, the only reason that I will think that if, let's say, apart from this, investors would prefer to segregate their holdings with different brokers is due to security's sake. Now, what kind of security? In terms, if let's say, for example, if let's say the broker was to go down under, their assets will not be safe. So this is why they actually prefer to separate their holdings with different brokers itself. Now, the thing is, investors will need to take note that for all brokers that's licensed with a MES, who has a CMS, a capital markets service licensee in Singapore, basically we're required by law to actually segregate our clients' assets and monies away from the brokers, as regular audits are being performed, as this actually minimizes the risk of the said risk earlier on. So personally, I feel that if, let's say, you trust the broker and it offers the markets and the products that you're looking for at a low cost structure, why not just use one main account for investment needs?
So based on what you see at Tiger Brokers, what equity markets are investors mainly trading in these days in terms of counters as well?
Okay, so what happened is at Tiger Brokers, more than 80% of our trading volume is actually for the US markets itself. And based on our cost structure, basically we charge 1 cent per share, minimum of 1.99. This is totally different from a lot of our competitors who charge on a basis points basis contract value. So due to this, a lot of our clients, what happened is that they tend to trade the bigger cap stocks, bigger price stocks with a lower share quantity. So clients who actually trade with us tends to like to buy, like, say, counters, like, say, a Tesla, Apple, to name a few. Yes.
So thank you, Ian, for the useful insights. To sum up, traditional brokerages are able to take you through the process step by step with their team of brokers. Online brokerages, on the other hand, offer lower fees but require a slightly more independent process. But when it comes down to it, investors should really look at their own criteria when it comes to selecting their first brokerage or subsequent ones. With that, we have come to the end of this week's Brokers Digest.